So, and how long does that take, that pre-approval
Well,
process?
it doesn't take long. Really, the only factor that we wait on, or the Achilles heel, tends to be just documents being sent to us by the consumer.
Again, just get a folder at home, buyers. If you think you're buying in the next 6 months, just get a folder, put all your W-2s in it, start collecting tax
Just W-2s, 2 pay stubs.
pay stubs, your,
Pretty much
what's
that.
the other thing?
Bank
Bank statements.
Right, depending on how much and we'll get into down payment here in a little bit, I'm sure. But depending on how much you want to put down, as a lender, we need to know where it's coming from.
Your assets, yeah.
Yeah, it can't be the drawer.
Yeah.
We
Underneath
don't
the
like
mattress.
drawers.
Yeah.
We,
You need some documentation.
doesn't-
Come on.
I know cash is king, but not in our world.
What if it's buried in the backyard?
No,
It's even worse.
no illicit money, even if it's not illicitly gained. But we do have to, as lenders, and this is pretty much universal across the board, we have to know where the money is coming from. And the reason for that is because it's really comes down from the federal government to make sure that it's not from illegal activity. That's really what it, because obviously somewhere down the road in the past, people have used illegal money to put down payment. So
What
they-
about
they
when,
messed it
and
up.
people ask me this too, they're like, my mom, she gave me birthday money, or,
Yes.
we got money from
Gift money.
whatever, gift money,
yes,
how
we use gift money.
we use gift money, and gift money is okay.
Gift
and
money is
have
okay.
to make
We
sure we
just
do it
make sure
correctly.
that the donor signs a gift letter. That's what we call it in our industry. But we also need to source the gift funds.
So then you go to the person who has gifted it, and you need to
And
kind
we
of look in.
one bank statement.
One bank statement.
One bank statement, and please don't don't Sharpie every line, but that
But that one line.
there's no redactions.
These things happened before.
Oh, we get them all the
You
time.
see it all.
What that's called is a the terminology I'm
Illegal
looking for.
operation.
It's called a manipulated document because it's
So no manipulation, no illicit funds.
Yeah, let's just be
Yeah.
straight up
no
here.
redacted.
Yeah,
Yeah.
no redacted.
No
none of that.
redactions.
Yeah.
We're not in
But
front of
by doing
Congress,
it-
so we're
by
not
the-
doing
yeah.
any redactions.
That's right. And by doing everything straight up, you're able to get a full picture. And I think one of the things that we've noticed is lately it just seems like more of our clients are able to get pre-approved without selling their home,
Mhm.
right? Which
Yes.
sometimes I think people feel like that they always have to sell to buy, whether that's because of, they don't want to carry two mortgages, or whether they're concerned about, hey, I want to use my down payment,
Right.
and
It's
the
mainly
equity I
has
have in
to do
my
with
home.
equity.
So talk to us a little bit about that process and some options that
Okay.
people may have if they're living in a home but want to buy a new one.
Okay, so typically when somebody owns a home and they want to upgrade or downgrade even in price, then we as a lender will take the application and we'll ask the client, are you trying to sell the house before you buy? Are you trying or we just say, here are all your options. You can carry, on paper you can carry two mortgages, no problem, or you can't. Now, if they want to tap equity, let's just say they have $50,000 in equity in their property that they're going to utilize for their down payment in the new house. Well, there are programs which uses a home equity line of credit, commonly referred to as a HELOC, that bridges that money. And we have contacts that do that. So you can actually tap that equity, use it for your down payment on your new house, and it bridges the two loans, and you almost say float the money, which it technically is what it does.
Yeah.
Until your old house closes and your mortgage and that HELOC are paid off.
Okay. And then another option is to do a recast, right?
Yes. So a recast, meaning that let's just say you had 5% down to put on a new house, and you were waiting on the sale of another property or the sale of a security, whatever the case may be. And let's just say that was $50,000. You could put that $50,000 as a principal payment to your new mortgage and then have it recast. What that means, it recast the note as if the $50,000 were at the beginning. So it re-amortizes your payment. included with the extra money.
Okay.
On a-
Including
on a-
and if it gets below that threshold, then it
Of
could even
80,
take off
of
PMI.
78%. Yes, it'll.
Can
take
you
it off.
only, you can only do it one time though, right?
I believe you can do it multiple times. I just never had anyone do it multiple
Okay.
times. It's very rare that even somebody does it.
Well, there's no
Once.
prepayment penalties on
prepayment
loans
penalties.
pretty much, so,
No, not anymore.
yeah.
Mm-mm.
So if you
But the
have-
big benefit, I think, to whether it's bridge loans or recasts,
Mhm.
it all gets back to being creative. And I think
Yes.
that a lot of the clients I know that we work with, when they're looking for a home and they actually own a home, they're struggling a little bit because the selections out there
Mhm.
are tough sometimes, right? And the inventory's really low.
Yes.
So we focus a lot of times on trying to find them,
Mhm.
a great home that may fit their needs because they don't want to get caught in a predicament of selling their home too quickly,
Yep.
right? So it's nice to know that there's options where they can go that route of using that equity,
Yeah.
but not doing it at the time of
Yeah,
having to sell first.
and the biggest thing is figuring out what you can and cannot do. Instead of making it a guessing game, then you get concrete numbers, and now you have at least options, or you may not have any options.
And sometimes people, this is a question I always had too, like if you have, your house is worth 190, you owe 100, you have $90,000 worth of equity in there. Can you tap into all $90,000 of that equity, or can you only do a certain amount?
Typically, what I've seen on a bridge loan is usually the maximum loan to value is what you're referring to, is about 90%.
Okay, so close to almost all of it.
Yeah, close.
It's pretty good.
Close.
Okay.
They like a buffer, obviously. If they did 100%, and then maybe you drop the price, then you're kind of upside down, and here we go. So, they're pretty good product. I mean, for tailored to a specific customer.
Mhm.
I mean, obviously the product's not for everyone,
yeah.
but if it accomplishes what the client desires, then I think it's a good product. And I hear a lot about 2008, right? And everybody's like, oh, 2007, 2008, 2009. And we're nowhere close to 2007, 2008, 2009. Nowhere close as far as a crash or overheating or anything like that. So the safety measures that were put in place after 2008 have worked. You're not seeing crazy appreciation. You're not seeing appraisers coming in at whatever they need, quote unquote.
Mhm.
It just doesn't happen. So that's a good thing because it controls the market to a degree, which obviously we've seen what an uncontrolled market can do,
Sure.
and we don't want to have an uncontrolled market. But I know you're going to you talk a lot about inventory. There's not much.
No.
Not much.
No.
And if there is, then you have, a lot of showings at one time, especially at certain price points.
Yeah.
Okay.
Especially at USDA properties, which are a 0% down product, it's a very good product. I know you're going to get into down payment, but that's just a little shoe-in, I guess,
Yeah.
right? Is that a little
Yeah, I
intro
mean,
to it?
0% is great. If you can
0%.
get in 0, it ain't better. Because I think a lot of people still think, hey, I got to put down 20%.
No, 20% down. The only thing relative to 20% down is that you avoid PMI, private mortgage insurance. We call it MI, mortgage insurance, which protects the lender in the case of a default. It's insurance that, again, it mainly protects the lender. But a lot of people, surprisingly, still think that. I mean, I talked to someone the other day who thought that, which I was pretty surprised. But you can go 15% down, 10% down, 5% down, 3% down, 3.5% down, 0% down. It just depends on, a lot of it has to do with your income. A lot of it has to do with the area, like Davidson County is all USDA, which is 0% down. If you're a veteran, you qualify for what we call a VA loan, which is a 0% down product that's offered by the VA. And how many VA loans do you think you can have at once? Do you know?
I would say
One?
one.
One? No, that's incorrect.
How many?
25.
Yeah.
25 is not.
Is it a little bit of a stretch?
25 is a little aggressive.
Yeah.
I don't.
So
I really,
one's wrong.
honestly, I did really think you could only have one active at a time.
Most people think you can only have one.
So how many is it?
We've done up to 3.
Wow.
Up to 3. So let's just say someone has a property in Virginia. That's VA finance, and they want to buy a property. They're moving to North Carolina and want to buy a property and use their VA entitlement. They can. They can have a 0% down product in North Carolina as a primary residence and still have the house in Virginia. Some, because it's what we've seen a lot of people do, is they'll turn their other one into a rental property.
And then does it still stay a VA loan?
Yes, it still stays a VA loan.
So you have all the perks and benefits.
And
of
it
that.
all has to do with entitlement, which is a number that is on their DD.
That's right.
Well, DD 214 generates a COE, certificate of eligibility, which tells us
How many?
the numbers
Yeah,
that we
that's
run.
good.
So if they've
info.
maxed out that
Yes,
number,
let's just
then
say-
at that point they
Right.
can't. But
Right.
if
But
they've
very
sort of got a high
rare.
number and they can sort
Do you
of
mean high number of like pre-approval amount, or
No,
high
like-
number
like
of
they
how
have like
many?
a
certificate of eligibility.
Well, let's just say they have an $800,000 house in Virginia. Well, they've probably eaten up all their eligibility with that property.
Sure.
But all the ones we've seen have not. So they always have some left that we can utilize for the new property here.
Yeah.
But certainly I've talked to countless realtors, countless clients who think that you can only have one VA loan. Incorrect.
Told today.
Yeah.
Now, you
I'm
can only
excited
really
about
have
that.
one FHA loan. It's very difficult to get to. You can only have one USDA,
USDA,
loan.
okay.
It's impossible to get to.
Tell me about USDA, or isn't there something where you can pay the PMI up front, or you can kind of,
Not for USDA.
which one is that?
Conventional. You can do upfront PMI.
Maybe the 5% down. Something I remember.
Yes, you can lump
we were
sum.
talking about that.
You can lump
yeah.
sum the mortgage insurance on conventional. We haven't had anybody that goes that route
Uh-huh.
that I can remember. It is an option,
Okay.
but it's not really utilized. But it is an option. You cannot do it on FHA. You cannot do it on USDA.
And the life of the loan, the PMI on an FHA loan.
It's forever.
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 Yeah.
Forever.
Forever.
I was.
So you can request it. Like, do you have to refinance out or?
Well, basically, you have to refinance into a conventional
Yeah.
product.
Once you get to the 80/20.
Yeah.
Yeah. Yeah. See, I think there's so many unknowns when it comes to this, and like for first-time home buyers, I think sometimes they think maybe they have to work for a certain amount of time. Like,
Yep.
how does that work?
Okay, so a lot of people also are under the impression that you have to be at your job for X amount of months, right, or X amount of years. That's not correct.
Okay.
The only time that plays is if somebody, let's just say, is full commission or full bonus. Then we need 2-year history to determine what that number should be on paper. But as far as somebody who's hourly, just started an hourly job, typically we need about 30 to 45 days in pay stubs to make sure their hours coincide at 40. If they're a 40-hour week, we need to make sure the pay stub's proving they're a 40-hour employee. Salary is really just one pay stub.
Okay. So sometimes the thought is they have to be in it for a certain amount of time or things like that. But it sounds like that if they're out in the workforce
Yeah.
and they've got W-2 income,
Mhm.
then they could get into a home a lot quicker than maybe they think.
Yes.
Okay.
Yes.
And do you guys do first-time home buyer programs? Or?
Yes, we have several programs that cater to first-time home buyers. A lot of it actually is USDA. We do a lot of first-time home buyers as USDA. We do a lot of first-time home buyers as FHA. And we also have access to North Carolina's down payment assistance program. So if somebody doesn't have a down payment or down payment funds, we have resources to obtain that for them.
And so USDA, for everyone, is mostly the rural areas.
Davidson is
And
kind of what I
then
use as.
NC Housing, or the NC Down Payment Program,
Is
that
everywhere.
is everywhere, and that's 100%. So if you need 100%, you go USDA or NC Housing. If you could do
Or
the
VA,
3.5,
if
or
you're a
VA,
veteran.
and then 3.5% is your FHA.
Correct. And
And
then Fannie and Freddie both do what we call Home Possible, Home Ready, which is a 3% down conventional product. It is income restrictive, meaning that you can't make $200,000 a year and qualify for it. But it also has less mortgage insurance than the typical conventional loan at that point. So you kind of get a break. Like Fannie says, if you qualify for this, we're going to give you a break on the risk. It's a very good product. We do quite a bit of them.
Nice.
And I think one thing too, like when you start talking about percent downs and the down payment, you still have to factor in that closing cost
Yes.
side of things.
Mhm.
And that's why it's even more important, I think, that when through that pre-approval process, we're able to get a clear picture of, yeah, they can do this % down. This is the product they're going to use. But that in addition to that, they need X amount in closing costs and prepays and escrows.
Yes.
Because it may be, we've got sometimes clients like, they can qualify for a 0% down program, but they still need a little bit of help on closing costs.
Right.
And so then that helps us as agents know, hey, when we go in to write an offer, we need to look for a home where the sellers can then come in and contribute to closing costs, and we ask for that too.
Yes, and we try and communicate that to the realtors on every pre-approval. If they're good on closing costs, if they're going to need concessions.
That's my favorite. I always get that comes across and says, "Yep, they're good at 150, but they need 4,000."
Yeah.
So, that always is very helpful for us when we're writing the offers, is knowing those things.
Yep.
Yeah, and so then, when you look at, we talked about first-time home buyers, but if we go up in price point, right? So jumbo loans. So let's talk a little bit about jumbo loans, what they are, and then there's been some changes this year, right?
The conventional loan limits went up to 484, 500.
Okay.
I think they were 451 maybe. So what that means is that once you finance over 484, 500, you go jumbo. Now jumbo has a little bit more restrictions than a conventional. So typically you need more assets. It's usually 20% down on a jumbo product. But you can also potentially do a conventional loan at 484, 500 and then do an equity line to cover the rest,
Okay.
to avoid a jumbo, if so be it.
Yeah.
But jumbo rates are pretty good, as are conventional rates. So most of what I see is conventional type of product.
Yeah. Well, it's great that the conventional loan limit has gone up,
Mhm.
so then more people can get benefit of that higher price point where
Yep.
they maybe before had to have more money down, more assets, things like that.
Or
So
they
it's
didn't
opened it
qualify
up a
for a
little
jumbo.
bit. Yeah.
Mm-hmm.
Yeah, it's
Yeah.
very possible they didn't qualify for a jumbo. So that's opened it up. I just think there's really good products out there, and I think that most the consumer side is not really aware of what benefits are out there.
Yeah, I
And
think that's what I've picked up on is that, getting a loan and going through this process, it's not a cookie cutter process.
No.
Like it's a very complex and almost personalized process based on, where you are in your life and what you have as far as able to work with and what your needs are. And that's even more important of a reason to start, I would say, with you guys.
Well, I would certainly say start somewhere, preferably.
Well, yeah, just
Okay.
just
But-
with the lender in
Just
general,
follow 'em.
starting that process.
Yeah.
But yeah, you just want to, just from any standpoint, this is the biggest purchase that you're going to make.
Yeah.
You should probably know what you're going to be paying before you make a decision on the purchase.
And people get excited, and I know, and they want to go see houses, and they're rushing out there, but, really, we have to take the time to talk to the lender. Sorry, you guys aren't the most fun people to talk to.
I know it's all. It's,
Matt and I are way more fun,
I know
Yeah.
But-
we're kind of boring,
but very necessary and helpful. Sorry. I'm just kidding.
Yeah.
You're super
throw me
fun.
under the bus.
Hey, my wife's a lender, so I got.
Oh, I like her.
Yeah.
She's super fun.
Yeah, but it's it is. It's such an important role that you guys play, and all lenders play in our business, and we're very appreciative of it. And so, let's finish up by just talking a little bit about, you guys. Yeah, I said that you're at People's Home Equity here. You got a branch here. Tell us a little bit about your team and how they can get in contact with you.
Yeah, I opened up my branch in 2010, and I've been in finance since 1998. So I've certainly built a solid team. I have 2 LOs, and I have a support staff that directly reports to me. I think that it's about 4 individuals. And then I can also tap into corporate resources if I need to. The biggest thing for me is that we have very good communication from my support team, meaning they communicate to me, and in turn they communicate to the consumer, and in turn they communicate to the realtor. Very important. That's my main driver in my branch. I think that we set the bar as far as what other lenders try and achieve as far as communication. And that's where I want to be. I'm not trying to chase let's just say a Rocket Mortgage, I'd rather have a discussion with you in person or on the phone about, okay, what are you looking for? What are you looking for in payment? Like, what's your game plan? That can't be done on an app that you download from the App Store. It's just not going to work. So just like, and you've always heard, oh, eventually realtors will go away. No, I completely disagree with that. Eventually lenders will all be, the streamlined. No, they won't. Sorry to say, it's just not going to happen. The reason is there's too many moving parts. This isn't, you're clicking on a product on Amazon
Exactly.
and having it shipped to you in 2 days. It doesn't work like that.
Every single transaction is different, and you don't know till you're involved in
Right.
it what's going to come at you. So
Well, just from a reality standpoint, would you want an economy where you could get a mortgage in 2 days? Do we really want that?
Sounds scary.
Yeah. It sounds like, okay, how's this going to end? Everybody knows how it's going to end. So let's just not go down the road in the first place. I mean, stuff takes time. If you were to get a contractor to work on your house, on your deck, and he's like, oh, I can do it in 5 hours, you're probably not going to use that guy
Probably
because
not.
you're going to go out and fall on your deck and kill yourself.
Yeah.
So it's the same thing.
Yeah.
Some stuff, high quality, takes time. You just can't substitute for it. I mean, obviously, right now you and I aren't talking in our iPhones trying to make a podcast.
Yeah. Yeah.
Because
That's
it's
true.
just not as good.
Yeah.
But
Absolutely.
we took the time, we have good equipment, and the final product is that much better.
Yeah.
So it's just the same thing in my business.
But your time frame generally, I always tell people, they're like, well, what do I do? What's the next step? How long does this take? And it usually takes like 30 to 45 days.
30 to 45 days.
Yeah.
Yes. And you'll have some of my competition say, well, we can do it in X amount of days, right? That's fine. But I'm not setting myself up for a false expectation.
Yeah, exactly.
Because if I can't deliver that, why say it? And I don't like saying something that I know that happens 10% of the time.
Mm-hmm.
And then I need to make excuses as to why it didn't happen. So we're realistic, and do we close quicker than that? Yes. Do we guarantee it? No. I can't guarantee the intake of documents. I can't guarantee a turn time of underwriting. I can't guarantee an appraisal will come back subject to. Can't do it. Or an inspection, that you have problems with an inspection. Can't guarantee any of that. So I'm not going to attempt to. We just go by basically what we feel comfortable on expectations, and we deliver on that.
Yeah. I think that's the perfect thing, because then you're trying to eliminate the surprises that really get people even more stressed out.
Yes.
Because this can be a stressful process,
It is a stressful
right?
process.
Especially the loan side of it. You get excited about the house, and then someone's asking for all these documents, so it gets tough.
Well, have you
And
bought a
so
house?
It's been a long time.
Was it stressful?
I don't even remember. It was 10 years ago, 15 years ago.
You bought a house.
It did.
It's quick.
Last
Yeah.
2 weeks
Was it
ago.
stressful?
It was not, because you guys did my
Yeah.
Oh,
Yeah.
she's lying.
Yeah.
She's lying.
Didn't
Um,
even sweat a drop. It was amazing.
Yeah. Yeah.
But it's almost a guaranteed stressful situation, just because it's the amount of money.
It is
Your-
going to be stressful.
Your family's
minimize that.
Yeah.
that's your home. Of course, you're gonna take it personal.
Absolutely. So, I think probably a lot of people listening or watching this podcast may have thought, hey, I've got a question about my specific situation, or, just a question in general about the process. So definitely leave a comment below, or if you want to reach out to us, email us, let us know. We can get your
We
your
love
question.
questions.
Yeah, answer
Questions are the
directly.
best.
Yeah. We'll go on another.
We like to talk,
yeah.
so
We
we'll
do.
talk all about it.
All
yeah.
day long.
Right. Are you gonna mention anything about rent?
Yeah.
So if you rent out there,
yeah.
if you rent out there, right, and you're like, oh, the reason I rent is because I don't have to worry about the hot water heater going out, because they'll fix it. I don't have to worry about this window seal breaking, because they'll fix it.
Mm-hmm.
And I agree with all that, except the only thing you know what the one thing you can't control is
The rent.
the
The
rent.
cost of the rent.
I was so close on that one.
You're almost there.
So it's almost like you're on an adjustable rate mortgage that only goes up.
Yeah.
Is your landlord going to say, hey, good news, I'm lowering your rent next year? When
Can't
usually
see
that
that
happen.
happening.
Usually that happen.
I just don't think that's going to happen.
Yeah. Goes the opposite way.
So
Always.
again, a good thing about, and I don't even know some of the, at least on Union Cross over there where I live, there was those new apartments that went up.
Oh, yeah.
And I know they have 3-bedroom. I'm not sure of the rent. I want to say like 1,400.
Yikes. Yeah.
I wanna
Rent's
say.
gone up. It's really high.
And that's not a fixed amount. That's just for a year. So what is it next year? So, or 1,450? Maybe. I don't know. The good thing about a mortgage is if it's 1,200 this year, guess what it'll be next year?
1,200.
1,200. The only thing affecting it is two things: property taxes, if you escrow, and homeowners insurance. So if those don't move, your landlord is you.
And every time you're paying yourself because you're creating
building
equity in your home
Yes.
that you can use for things down the road.
Yes. Otherwise, you're creating equity for your landlord because your money is going to pay down their mortgage.
Which, if you're the landlord, it's great.
Of course.
We can help you on that.
Yeah, we can.
Of course. But I know I've I read a lot of articles and I do a lot of research on the rent market, and certainly I see both sides. But if you're long term, if you're a long term thinker, if you're a long term even quote unquote investor, if you want to build wealth, you don't do it by renting an apartment. It's just not the way. That's pretty much universal. So, I mean, I encourage you to ask questions, to look at the market. I don't see, any type of crash or big depression on the horizon, and I'm not trying to do that to be biased. The indicators are all pretty good. But we like questions, right, Matt? We love,
Absolutely.
we love questions.
So definitely make sure you submit your questions, email us, text us, message us, comment, whatever you want, and we're happy to follow up with you. But thanks again so much for taking the time to join us.